Welcome to Next Level Trading. This is a very important week, guys. So have a look onto it. I did said that since the beginning of this week that something is going to happen. Some changes are happening to the market, as you can see that the fundamentals are also lining with that. From Wednesday onwards, we would have be expecting a market having a lot of volatility. We have interest rate for USD, we have interest rate for euro, we have interest rate for GBP, we have NFP as well. These are more than enough, the catalyst for market to have a change in that directions. We have to talk about them shortly once we go to that. Anyway, we make sure if we are trading these news, attend our Wednesday session. This does not make any sense actually going to the depth of this news, because at that time actually going to the Wednesday session will probably have some more charts visible for us, and that is what we need in order to make decisions. So make sure to attend the Wednesday session and this week, and then after that we will talk about all the news, whatever is coming, that is important ones for after Wednesday. This is pretty much reflecting around Monday, Tuesday and half of the Wednesday. If it is Wednesday, otherwise it's okay for the rest of the week. Monday, we are expecting pretty slow terms for the fundamentals, so you would have to expect a pullbacks in most of the market pairs that we have seen on Friday. On Tuesday, we have GDP month on month for CAD, as you must have seen. I didn't mention on the coding, even if that news will push CAD alternative to upside, it will still drop down, and you must have seen it was a chance for you all to get back and then backwards. So this news will probably give CAD more strength, because I am expecting all the CAD alternatives breakdown to early morning about this week, right? And then from this day we will seeing starting a push to the upside for the rest of the month for the CAD strength. Now after that, we have employment change. Unemployment rate in New Zealand looks very strong for this month, all for the month of February. So just keep an eye for this one. It corrects and then push it up. Push it to the upside, will be a decent push to the upside. So we take a certainty push, so that on Wednesday we have CPI flat estimate, that have a flash number to go to the 9.0 to 9.2. Now from this news, we are expecting to go down. Inflation will go down, what I was expecting, because this goes actually by 50 basis points also this week as well, because the expectations from the market is that ECB increases interest rate by the 50 basis points. Then after that we have non-employment change, as the change is actually quite low compared to that actual last time. This will give a dollar the some sort of weakness, as a temporary weakness for all the news. The ISM job opening rate, okay. Then after that, FOMC, I'm expecting some sort of change happening here. Change could be that increase by 50 basis points, or by could actually increasing by 25 basis points. They can say by the end of this year we are expecting to be the X percentage for that, right? That will be the case when the market makers would actually be calculating that how often they need to do that in order to get to the level by the end of this year, and that could be the huge to the dollar, and then market might start by a dollar. And then again, the session of the Wednesday is important. We will talk about this one and see what market could actually will be taking us in terms of the structure, as I'm not expecting in January market to break 101, and expecting 101.5 and between 112.8. And that exactly what market could have been doing, what we have just in 2 days left. After need to see what market does between those 2 days, market raise. If market respects this we could see some strength, right? And on Thursday we have been expecting GBP rate to increase 50 basis point, which market has actually been buying, and I am expecting the same sort of strength GBP as well. Euro dollar B financing rate, actually they are increasing. by 50 basis points, which is a pretty much done a deal. This is 50 basis points, so I am not expecting any sort of a change. So this is 3% is coming in this one. We need to see structure, what structure is telling in terms of the expectations. That will be pretty accurate, 3% that would be expected. Then on Friday we have NFP, and again on NFP we are expecting unemployment rate to go up. It is that will go up, and this number is 193k, is a lot lesser than expectation. Then we are gonna some sort of a weakness coming into the dollar. So if they are planning to drop dollar massively, breaking 101, they would do this to the upside to this FOMC, and then break it down from the unemployment rate. Otherwise, vice versa. So then some services PMI that is might actually be a decent one, because they are expecting an increase in this, and this is actually is the reflection of GDP of this country. So if that would be the case, you will probably see this one, and if market gives you the negative impact, this will be positive just to slow down a little bit of that, and it would be the expected from that market. But if it is better than the expectation, you can see further strength into the dollar again. Wednesday is the best day to talk about this. So see you Wednesday, and see you the next time. That's all from the fundamentals.